All right, welcome to the daily market recap for Monday, August 11th. In this video, I'll be taking a look at the action today from the indexes, liquid leaders, industry ETFs, then end the video with long and short setups, just like we do every daily recap. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market thoughts throughout the trading day, along with a live stream at Market Open, sign up for the Discord using the link below. All right, jumping into it, QQQ end of the day down 0.3%. We saw new highs in the morning, and then we saw another day of sell-off in the afternoon. Continues to turn a little bit, but the indexes at least are right at highs, if not making highs today. So can't get too bearish based on that. We do have the gap from Friday's gap up and the 5-day moving average. That'll be a good test to see if we can put in a higher low and kind of build some consolidation there before trying to push into new highs and like do that in a sustainable way. But if we crack the 5-day and the gap here, that just kind of looks like an uppercut and failure of the previous highs, and we could be in for some pullback. The S&P 500, similar action, ending the day down 0.2%, still over the 5-day moving average, but same kind of setup with that 10-day moving average, the gap zone. We do have CPI coming in tomorrow before the market opens, so that's going to be um, at least provide liquidity to the market, whether we use that liquidity to sell off into and you see a lot of pullbacks, or if you see the liquidity used for accumulation and we rally into new highs. That's yet to be seen, but just know that we do have that important data point coming out tomorrow. The growth stocks of the Russell 2000, IWO, continues to just chop under this resistance gap, cannot fill it on a closing basis. You see every time we rally through it, we get stopped by the end of the day and we close under it. Kind of two lines in the sand is the 20-day moving average, right around 290, and that resistance gap high. So if we close above the resistance gap high, this looks like a higher low after the shakeout last Friday. And then I think we can continue to trend higher. But if we lose the 20-day moving average on a closing basis, that would be more concerning to me. ARKK did gap up today. They have a lot of crypto related exposure. That was working at the start of the day, not later on in the day. As you can see, we rallied up into the resistance gaps, the top one, rejected right off that spot, closed still green on the day, 0.67%, 0.66, whatever it was, but did close at low of the day, which is obviously not ideal. And then IBIT used to track Bitcoin. Some higher highs here, good action overall. We did close relatively weak, but as long as it's over the 20-day moving average, I think that's at least one of the groups that is continuing to keep this market afloat. If we lose the 20-day, then we can see some weakness there. Taking a look at the liquid leaders, we'll sort this by price percent change today. Reddit is one of the few stocks that continues to trend higher and be accumulated after their earnings announcement. So many stocks this earnings cycle have gapped up and then just sold off the rest of the day, or they've gapped up, stopped sideways, and really not gone anywhere after that gap up, and then plenty of the software names, security names have gapped down on earnings. So if we're taking a look at how the market is responding to earnings reports, it has not been good. They're using that liquidity to get out of the market instead of accumulate more. Reddit is one of the few names that's not doing that, and that's why it needs to be a focus name in your universe. Today, we're getting a little extended, uppercut and failed at that resistance gap high. Still closed over the 5-day moving average, but um, this is a little extended. Obviously, no like clean setup here, but a name that I would be looking for relative strength on a market pullback to play once the market is done digesting. Roblox up 1.7% today, little undercut of the 10-day, then rallied up, closing over the 5-day. I think it's just kind of churning here. What I'm glad is not happening is we're not following through to the downside. We sold off after the earnings gap up, and then we gap down the next day to the 10-day, but we didn't continue to follow through. We kind of consolidated, rallied, consolidated again, and we're churning without price appreciation, which isn't ideal, but it's better than the alternative of gapping down. And then we've seen how some of these stocks have acted after their earnings. This one is just consolidating sideways afterwards. GEV, same kind of stuff. It just feels like this is losing momentum, and overall, the AI energy plays have become considered consensus. Like they just have to go up because we need as much energy as possible to power AI, which makes plenty of sense. But there's no clean bases out of any of these energy names. Like all of them are extended, all of them are either pulling back or just kind of like chopping without any more momentum. And we've made massive moves. Like this is an awesome chart overall. And it can continue higher, sure, but risk reward wise, like you need quality bases to typically make quality moves higher. And just like we got out of the correction this year, we had multi-month consolidation and then we broke from there and trended cleanly. Now we're just chopping. There's not really any momentum left. It's showing good relative strength within the group as some of these energy names are starting to sell off. But it could be the case where like this is just the next group to get hit and this is the next leader to get hit. ALAB, good action today, closed basically flat, higher high, higher low. We'll take a look at that HVC. I think this is on the long setup to watch. I do have a position in this already, but we'll look to add to it if it shows some relative strength while the market comes back in. NVIDIA not doing anything wrong today, just kind of like a little bit more volatile day without any price appreciation. Still over the 5-day moving average, but not doing anything wrong. Robinhood, a little bit of a reversal today. It was up like 2% at one point in the day, closed at the low of the day, and I think it was down a little bit after hours as well, but still above the 5-day moving average. And today was lighter volume. So, really, like the three names that I think are leading the market is Robinhood, NVIDIA, and Palantir. And I think those are kind of going to be the last names to pull back. So, I have a position in Robinhood. I have one in ALAB. But if Robinhood really starts to crack down, like that would be a big warning sign for me. DoorDash, another name that gapped up on earnings initially and then sold off since, um, has these longer wicks to the downside, showing there's some accumulation intraday, but still there's not like a clean setup here. So maybe we pull back under the 20-day, this gap zone at 245 or 248, whatever it is, then bounce from there, can put in a higher low and then trend from there. But for now, like we got good news on earnings and they're selling off that good news. MP, another name that had a major reversal today, uh, took out all-time highs, rallied up, and then the rest of the day was just spent selling off. We closed at the low of the day, down 2.3%, and still have a little bit of air to the 5-day moving average. But you can see volume has picked up the last 2 days because they reported earnings. So always the day after you're going to see more volume. But today's follow through or uppercut and reversal wasn't ideal, and it came on a little bit of an uptick in volume. And then Palantir, red closed today down 2.3%, is right on the support gap, and it's still above the 5-day moving average on light volume. I think the market, if it's going to continue like higher, I think Palantir and Robinhood and probably Nvidia go into some blow off top type moves. But that I think we're getting like later stage of this move, and now what we have in the market, and I covered this on the weekend report, but the NAAIM, like the Active Investors Exposure Index, it's at 96% long. We had those 2 days, the last not last week, but the week before, Thursday and Friday, where we saw sharp pullbacks after Meta and Microsoft's earnings, and they used that pullback and bought as much as they could. 76% invested to 96% in one week change. Also, taking a look at the quartiles, you can see bearish sentiment. People were bearish 200%, 200%. Now the most bearish participant in this has no short exposure, just neutral. That's the most bearish person. Then you have your quartile one at 90% long, meaning the person that's 25% like least invested is 90% invested. And overall, just 96. Once you get over 95, you tend to see a lot of funky action. It doesn't mean you have to pull it back, But with exposure so long at this point, and we have a key event tomorrow with CPI, and we've started to see a lot of cracks in the market, I'm being very cautious on the long side and starting to be very aggressive on the short side now. Jumping into the ETFs, a couple to highlight here. Blockchain ETF, BLOK, uppercut and failed at the resistance gap, closed near the low of the day, but still right at the 20-day. If you could pull back, put in a little higher low and retest kind of this pivot on the backside, that would be fine. Semiconductors, uppercut and failed at the resistance gap at highs. Hopefully that's not where this ends up and we can just consolidate for a day or two and then push out there. But cognizant that we did reverse right at that key spot. Financial ETF K or XLF continues to struggle at that 20-day moving average. Kind of at higher highs, higher lows today. Closed flat on the 50-day, but still in the shadow of that bearish engulfing candle on Thursday. Biotech ETF, I think this is at a do or die spot. It's sitting right on the 50-day moving average and support gap. So if you think rates are going to come down, so say CPI inflation numbers came down and rates then would move in line with that, and we would expect rates to be cut if inflation is lower. This is a really good spot to manage risk against. So this will be one of my focus names tomorrow, depending on how that CPI comes out. But just taking that versus the low on Thursday, that shakeout is going to give you some good risk reward. But very similarly, you can see if inflation comes in hotter than expected, we're already seeing some resistance at the 20-day moving average, which is downsloping, and the resistance gap here. So really tight action at a do or die spot. That usually means that we're going to see some expansion shortly. Cybersecurity continues to sell off, tried to rally, could not, close right near the low of the day. Nuclear theme, NLR, pulling back into the 20-day moving average and bounced there. OKLO had earnings after the market closed, and last time I checked, they were basically flat. So let's see where they at. Yeah, they're down a little bit, basically flat because they don't actually have earnings. Uh, Two others that I wanted to cover, KWEB, Chinese Internet ETF. I still think like the only sector or the only group, the only theme in the market that has a quality base right now is Chinese equities. So if the market's going to go higher, that's something that can actually take us higher. We've got this 3.5 year base right here. We have another higher low. We have a breakout retest 2 Fridays ago. And TME reports, which is like the leading stock in China right now. TME reports before the market opens tomorrow, so that'll be good thing to watch. You can trade it through today's high as your entry. Stop would be today's low. Looking for just like a little higher low after the shakeout. And then IGV, another group, another growth stock, like leading group that is really starting to come under pressure. We had that gap down wedge pop or wedge drop, sorry, last Friday, a lower high rally. Then we fell through the 5, the 10, the 20-day moving average again on the 7th. Inside candle Friday. Today, gap down. Had a mini rally back up to the 20-day, but closed under the 50-day. You can see some distribution volume starting to pile up here. So we've already lost cybersecurity. We're starting to lose software. Nuclear is pulling back. Semiconductors, financials are struggling to getting going. There's just really not momentum in the market right now. And we have all the positioning on the long side, which is not a good environment to be aggressive on the long side. That being said, I do have some long trades to watch. And these, for the most part, I'll be watching on pullbacks. So Tesla, zooming out, really good multiple year base right here after its move in 2020. Starting to consolidate here. We got all the moving averages bunched up. We've had about 4 days of really nice trending action higher. Now we'll look for some relative strength if the market pulls back. What I would want to see is a pullback into this 330 area right at the low of the gap zone. Allow that 5-day moving average to catch up and then play some there versus the 200-day. Meta acting really well post earnings. It's not being accumulated like a bunch. We're not seeing price appreciate after that earnings gap up, but it's also not falling apart. It's basically trading sideways, letting the 5-day moving average catch up, which to me is healthy action. This is one where if we can pull into the 10-day moving average and kind of shake out in the morning, that would be the spot to watch. You could take this on strength, but given the positioning and given how trading anything on strength has not worked in the last 4 or 5 weeks, it's not a trade that I would personally take, but I would use it. I have alerts on this to at that HVC to say if we do go through that area and instead of just uppercutting and failing, we actually follow through to the upside, well, then there's some evidence that I can take and get a little bit more bullish because we actually have a stock that gapped up on earnings, consolidated, and then started to run again. But actually executing that order and trying to trade and make money on that side, I would rather trade a shakeout than strength right here. APP, great action after earnings. This gap down and traded at like 3:30, like post market hours after they announced earnings. I woke up the next day and they were basically back to green. Eventually, just took out the pivot at $400. That was a good buy. And since then, we've had 2 days of follow through. So we talked about Reddit being one of the few names that followed through to the upside. Hopefully, APP can do that as well. But this is one where if the market starts to pull back, we've got the HVC, which is just the high volume close of the earnings day. We've got the 5-day moving average, and we got the gap zone all lined up. So watching that 438 area as a potential ad spot on this name. ALAB, very similar overall. Monster move on earnings up 28% and hasn't gone down, has been slightly accumulated since. Now we want to see some relative strength while the market pulls back. I don't think this is just ready to go tomorrow in any way. But just wanted to put this on your radar. If we could tighten up for a couple more days, let that 5-day moving average catch up to the HVC, then that's a spot that on a quick undercut and rally or an undercut and reclaim, you can actually try to build some exposure there and keep your stop within 1 or 2%. NET at a do or die spot. It's pulling back to the 20-day moving average and has that support gap. I'm actually looking at the support gap below that. Because we're in a choppy environment, I want to kind of force myself to wait until the last moment to buy some of these setups to really shake out the rest of the people and then buy as it comes back through that zone. So there's a very small support gap at 198.40. So that's the area where I'm looking for an undercut and a reclaim. And then I would have a 1 or 2% stop there. FUTU, this is one of the leading Chinese names, and we just covered how big the base in Chinese equities looks. Alibaba, another name to watch within that group, but I think FUTU and TME, which I'll cover in a second, are the two leaders. FUTU, just looking for a higher low, so pull back into either 155, you got a gap zone there, or 152. Gap zones are way less important for equities that trade on other exchanges. So even though I have them drawn like partially for FUTU, it's more so about like the price action. So just pulling into the 20-day moving average would be a little bit better of a spot to manage risk for me on this one. NVT, another name that gapped up on earnings up 14%, and trades super tight, has not given up much, but also has not been accumulated yet. Really big base here, double bottom base from 85 to 40, like pretty big flush in April. This is one where I would want to see a undercut of the low of the pullback and a reclaim of that area as your entry. Then your stop would be 1 or 2%, whatever gets you to the 10-day moving average. And then when it comes back through the HVC, you could either add a little bit more or just use that buying power to give you multiples of your risk while instead of buying up here, you get a nice tight entry with a tighter stop. TME, they report before the market opens tomorrow, but this has been, I think, the leader in China, one of the few names that have gapped up on earnings before in May and then just rallied. You see only one close under the 20-day moving average. So great action overall. I'm very hesitant to play gap and goes, even with like that the Chinese base that I've covered. but I might take it with a little bit smaller size if we can get a gap up, opening range break, something like that. Just more so putting TME on the radar for the earnings reaction. METC, this trade's kind of funky, but what I see here is actually accumulation after earnings. So after earnings, we had that shakeout under the 20-day moving average, rallied right back into highs, a little gap down that we opened on a low, closed right near the high of the day, reclaiming the 20-day moving average. Usually a great sign when a stock does that. And then we've just rallied right back up to highs. So a couple days tightening up here, and then you could use just a flat break of highs right around 2410 as a potential buy point. But as it pulls back into like the 20-day moving average, wherever that lines up, that would be the spot that I would watch for my initial entry. And then AEVA, this name was one of the leaders in the growth section, went from $2 up to $40. Since then, uh, gap down, rallied lower high, and then went through, I think it was like 17 days in a row of just sell, 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 all the way down from 32 to 12. Now we're starting to see some accumulation. I always say the trend doesn't change until you get a gap in the opposite direction. We got that gap on Friday. We tested that gap zone today. So just watching for a pullback in that support gap. Today was probably like the place to play the oversold bounce. But if we get some morning weakness and we come back into this 1250 area, that would be a spot that I play for, just an oversold bounce, not trying to hold for too long. And then more excited on the short side, we'll go back to the well with NEGG. Still not doing anything too wrong. Slight gap down today, but above the 5-day moving average on light volume. I still think this has probably one more like big move up because whenever you get these extended moves like this, until you close under the 5-day moving average, you on the short side, you're not safe at all. We saw a couple big moves here and we're stalling action at previous highs, but we never closed under the 5-day. We just consolidated, then got that big move on Friday. So we'll look for a break under the 5-day moving average as the entry there, and then the stop would be whatever the high of the day is tomorrow. SBET, this was on the short watch list coming into the day, played out perfectly. We uppercut and failed right at the resistance gap on massive, massive volume. Exactly what you want to see for another lower high after this purely speculative stock went from $2.08 to $115 in like 4 trading sessions. Then you get big sell off, rally into a lower high resistance gap, sell off, lower high resistance gap, and notice the volume because that's what's really going to create as much selling pressure as we need on the downside to play for a longer move. Is everyone's getting back in this name right as it's getting extended into a resistance gap. So we saw the weakness there. That was like the A plus short entry. Now we're looking for just another little rally that doesn't get like to the top of the resistance gap, but a little bit of a rally. Ideally, it touches the bottom of this zone, and then we lose the daily VWAP. That would be the entry versus the high of the day if you're not already short. Same setup with BMNR. Great short today, uppercut and fail at that resistance gap. Came back a little bit and uppercut the previous high of the day, right at $70. But right once it did that, we saw pressure come back in. Highest volume ever on this name on a lower high into a resistance gap, just like we saw with SBET, the second or like the first lower high in the rally. So chances are that was it for this name. So we'll just look for a little morning run, then loss of VWAP to short versus today's high. Palantir, I'm holding off on shorting this for now. Maybe Friday was the top and we just sell off. That would be a little disappointing because I really want this to go into a blow off type move. So hopefully inflation comes down. We get a nice pump in the morning or a pump tomorrow and really get this extended. But a couple more gap up zones. And I think we could see something similar to MSTR back in November or December. I think it was November of last year on that blow off top. So Right now, to me, there's no clean short setup just yet. We really need sentiment to just capitulate and everyone to be long Palantir. We might have been there on Friday, but really looking for another gap and go, and then a gap up that fails, loses the VWAP as the short there. TTMI, kind of similar to AEVA, where it made a monster move from 18 up to 50. We gapped down on earnings. We've now put in a lower high into this resistance gap. We closed at the 20-day. So just through today's low is a short versus today's high. And hopefully we get a sell off like we got with AEVA, gap down, lower high, and then just falls apart there. Amazon, currently, this is my largest position. I'm short this on the uppercut and fail of the 20-day moving average and resistance gap here. So inside candle on Friday, followed through to the downside today, even while many of the rest of the indexes were green to start the day. This I think was green for a split second at one point today. Closed at the 5-day moving average. Lower volume here, but let's see if we can follow through the downside, lose today's low, lose that 50-day moving average, and this would just be a lower high, kind of a bounce after that ugly earnings gap down. HWM, this has been a monster stock as well, from 100 up to 192. Now we get a gap down on earnings, little bear flag into the 50-day moving average. We're consolidating here. If we can uppercut and fail at Friday's high, the 20-day moving average, that would give you your tightest risk to enter the short. But I think where we're at, we just want to see things kind of break to the downside and actually follow through. So through today's low as the entry, stop at today's high. SFM, I've covered this 1,000 times. This is starting its stage 4 decline at this point. Under under the 200-day moving average, starting to live down there. Just it's a slow moving stock. So you can position size however you want. Just looking at the 200-day moving average as my stop on that one. SLDP, I took the short today, trying to fill out the position tomorrow. But a name that we've had this big move from 71 cents to $4.70. Actually had a good response on earnings, but instead of railing into new highs, it was up, what, 30% that day. We've turned around and sold down to the 5-day moving average. We tried to gap and go today, but came under selling pressure again, closed basically flat on the day. Now we want to see follow through to the downside as a way to add to the short. BMNR we covered. OPEN, similar idea with like BMNR and SBET, where we've had this big speculative move from 50 cents to $5, a 10x. Then we gap down on earnings. Now we're railing up a little bit into this resistance gap zone. Want to see a full uppercut and fail at 250 as a potential short there. Otherwise, we could play this like on the other side of the move, let it uppercut fail, put in like a tight day, and then we could play it on the downside. And then ZEPP, I think this probably has another leg up. Kind of like NEGG, I wouldn't be surprised if this has another one or two monster days to the upside. But we are getting extended short term from $2 up to $32. Great move. Acts really well. Like for how illiquid it is, it does tend to trade very cleanly. And that's why like I'm not as confident that this is just done right here, because this is just clean action. Gap up, open on the low, close near the high of the day. Looks like good clean accumulation. So in those situations where it's like a clean acting stock, I am a little bit more patient on trying to like short the top, and I want to see a gap up, loss of VWAP. That could be your short versus the high of the day. But really, like have a first red day or have a gap down zone to start piling up and to show that there's actually some resistance and actually some supply coming from the sellers here before we get aggressive on the short side. For now, this looks completely fine. All right, that's going to be the daily recap for Monday, August 11th. Hope you guys enjoyed the video. If you did, leave a like. And once again, if you want my market takes throughout the day, along with the live stream at the market open, you can sign up for the Discord using the link below. Have a great rest of your night, and I'll see you guys in tomorrow's video.